Market was down today. The Dow was down 200 and almost 5 points, down almost 0.5%. The S&P 500 down almost 20 points, making a new all-time high and then retreating from those highs. Ended down 0.30%. The Nasdaq was down 0.38%, down 90 points again, making a new high and retreating from it. Also down 0.61%, and the VIX was up 6.32%. The VIX closed at 1598. I think the VIX has now bottomed. I think the S&P has likely topped, in my opinion. We put in a top today. We're going to peak in July, so I think before August 1st, Trump's to the tariffs, I think that's going to be associated with the top, and I think we're going to peak likely before August 1st. That's what I think. I could be wrong. I'm just telling you my opinion. Again, the seasonality, I told you if we go to the upper boundary of the rising wedge, we can see the seasonality play out. We still may see it play out. But again, I think you're going to see the volatility in August as the seasonality is showing here. I think that's going to end up being correct. The seasonality is not always right. I told you if we go to try to reach the upper boundary of the rising wedge or end up reaching it, the seasonality will be correct. And the seasonality has been correct. Went sideways for a couple of weeks after the July 3rd peak, as we've talked about. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the chart, if you like the indicators, let me know that by supporting the channel today. Most YouTube channels make their money by getting sponsors and selling you a bunch of junk you don't need. I choose not to do that. Turn those offers down. But I need to hear from you in order to make it work. If you like these signals, if you like the indicators, let me know that by supporting the channel today. Follow the link below to take you to a secured site and you can donate any amount you want. If you could take a moment to step up to the plate and help out, I would really, really appreciate that. Please let me know you want this information and you like this information. I thank you for your consideration for that. I'm looking for a reversal. We might have gotten the reversal bar today. I think we have. It needs to be confirmed and get a follow through. I'm speculating on divergences myself, the divergences in the daily time frame and in the on the intraday charts. In order for me to be correct about a reversal, we have to come back down and take out this low 6,300 area and see my trend signal start turning bearish. I don't have a reversal here yet. I may not get one. It might be delayed. Over here, it was just after the peak, from February 19th and the very next day. But as what I'm looking for is to see if I start getting red here. And if I do, there's a very good shot we have a peak in today with the bearish engulfing candlestick. If we start seeing signals begin to flip this week, a lot of things going on, still may go up and hit the upper boundary of the rising wedge. That's still possible. We've got earnings, we've got the Fed, we've got Trump's tariffs, we've got a lot of stuff going on. We've got the GDP, the PCE inflation. We have a reversal here. We need to see confirmation. If we see it, then again, you could still reach this upper boundary. I think you've got a good shot that we're going to turn with this bearish engulfing today. A lot of information to digest, and it may be we still try to reach this level. I'm telling you, I don't think that's going to happen before it could. Signals are still bullish. That's why I'm showing you those signals. But possible these divergences are now done with the awesome oscillator and the MACD here. RSI reaching an extreme. Again, I told you to expect a wild week this week. At the Fed meeting tomorrow, we've got important Magnificent Seven earnings. We've got Meta and Microsoft after the Fed meeting on Wednesday after tomorrow's close. We've got Apple and Amazon the next day after Thursday's close. At the jobs report, we get the inflation data. Tomorrow morning, we'll get the GDP, the second quarter. We've got a lot for the market to digest. We've got big earnings. But I think you're going to end up seeing red bars here. And I think, again, the multiple point divergence that I was calling for is coming to a conclusion here. And we get a pullback. Now, I'm not saying that we're going to stop and it's over. I'm saying we get a bigger pullback, bigger than what we've seen towards the 200 period, maybe above it, maybe to it, maybe below it. Again, I'm thinking we're going to probably drop 400, 500, 600 points, the S&P 500 after hitting the 6,400 area, maybe to a gap or two, to fill a gap or two. We try to get something bigger, but then I think we're going to go higher. We have momentum still bullish. My signals, which are correct, remain bullish. My momentum signals are bullish. My trend signals are bullish. But I'm looking at divergences developing, which are suggesting on the MACD and the Awesome Oscillator, likely going to see a turning point. I think you got a good shot now that we're going to have that turning point with today's bar. More about that in a moment. Looking for red bars. We may still get green even if we sell off, but I'm looking for a move below the 10-period moving average and below the lower boundary of the cloud. That would take out the 20-period, the blue line. If you get that, I think we'll start our move. I'll start a move towards the 200-period, which is currently at 58.93. You can move to just above that level, you can move to it, or just beyond it, but I think that that is where we're headed to. A test of the 200-period moving average. Still off today, the stochastic's rolling back over, the MACD's rolling back over as we turn back up. And again, I talked about the divergence developing in the most recent price action on the MACD, possibly turning above the signal line and then turning back below it. That's what's happening. About that at great length and detail. Nasdaq 100 got another green bar today, but it's going back and forth from red to green bars, again forming this divergence. We had a rally to a new high, and then we ended up down. We ended up down 0.21% on the Nasdaq 100, down 48 points, rounding up. Stochastic rolling back over. MACD not able to get above the signal line, still bearish. And again, you've got these divergences on the MACD and the Awesome Oscillator, these multiple point divergences that we've talked about at great length and detail. In order to have momentum flip on the Nasdaq, we got to drop below the 10-period moving average, take out the lower boundary of the cloud, see bars flip to red, see the cloud flip to red, and that means taking out the lower boundary of that cloud and eventually trying to drop below the 20-period moving average, the blue line there. Right now, my signals are still bullish. I think the divergences are likely done. About this divergence developing on the VIX and warned you eventually this would produce a top in the S&P 500. We have this bullish divergence. See it really well here on the MACD. This divergence gave us a little bit of volatility in June. And then we came back down and we straddled along this trend line. We've dropped below the lower Bollinger Band, and again, Bollinger Bands have tightened up. This is telling us something is getting ready to happen. When we had the move at the February top, the Bollinger Bands had tightened up. We had a push above them and a rally on the VIX, and then we came back down. But the Bollinger Bands had tightened up right before we began the February peak, right before we began the sell-off. The Bollinger Bands tight like what they are right now, telling us something's about to happen. I think you got a very good shot now. The S&P or the VIX has bottomed here. The S&P has topped. Stochastic is turning back up today. The MACD has got this bullish divergence. It has to go into positive territory if we're going to see volatility return, and then we got to see the RSI move into levels above 50. It's been consistently below 50 as the market has been trending higher ever since April. We saw the extreme, April bottom in the market. Eventually, the RSI dropped here on the VIX. Has been consistently below 50. RSI on the S&P is consistently above 50, trending higher. I think the VIX is warning we're about to see a spike in volatility. You got to be able to get back above the 50-period moving average. Previously, we got rejection at it. Had our seasonality kick in, going sideways on the S&P. We saw a rally last week and on into this week now. That's likely putting the finishing touches. Bottom here on the VIX and a top on the S&P 500. Fear Greed Index is forming a divergence with the S&P 500. We're at extreme greed. We're now moving out of it to greed here. The divergence had already completed before today. It was still under construction as the S&P moved to new highs. I warned you about the bottom on April 7th. I was warning that we were at single digits. We were at readings 7th, 8th, and 9th. We're at readings of 3, 4, and 5. These are the readings that bottoms are made of. Either you get divergences at extremes like we did at the February top. You get a divergence at the February top. You just get an extreme. You get an extreme at a top or bottom. Here we have this divergence, as I've talked about, with the Fear Greed Index making a lower high a few days ago and the S&P making higher highs right now. They're diverging from one another. Warned you about the divergences, like with stocks above their 20-day moving average. We're forming this multiple point divergence on the S&P with stocks above their 20-day moving average on the S&P 500. Talked about the divergence with the stocks above their 50-day moving average here on the S&P 500. Again, diverging with the S&P 500. S&P made new highs today, intraday highs. The stocks above their 50-day moving average have made a lower high and formed a divergence here. I warned you about the bottom. Again, stocks above their 20-day moving average, and here stocks above their 50-day moving average. These were at single digits along with the fear greed index. Everybody was saying we were going to crash. I told you we bottomed at major support on the S&P, and I showed you that support in the weekly time frame. Now we have complacency, and the herd is saying, oh, we have a breakout, we have a breakout. At the bottom, the herd didn't believe we can go higher. Now they don't believe we can go lower. Is complacent, and that's why I think we are topping. Warning you that the put to call ratio is warning we're likely forming a top here. Jump in the put to call ratio today. Nobody's buying protection, and it's probably not the herd, probably the institutions. The herd, again, doesn't believe that it's possible that we go down. They always do at every peak. They look at things with their emotions. I've warned you about this divergence. We had this divergence here. We had the July 3rd peak and we went sideways. Now we've gone up the last week and a half or so. We've got another divergence right here. This is very similar to what we had back here at the February top on February 19th. Red line is the 5-day moving average of the put to call ratio. The gray in the background is the actual raw data. It's jumping up today. Somebody's buying protection today. And I'm telling you, it's not the herd. The put to call ratio tends to be a contrarian indicator because traders tend to get extremely bullish, because again, these are people that are part of the herd. Retail investors, they tend to get extremely bullish tops and very bearish at bottoms. When I called the bottom, shouted down, called all kinds of names, told what a dope I was. It was obvious we've already peaked and there's no way we're going to rally. And then when we got the rally that I predicted after the bottom, the day of the bottom that I called, then all the way up, we've been told it's a bear market rally, which is exactly what I predicted the bears would say. And eventually I told you the herd would turn back to bullish with Kramer calling for the Black Monday crash along with the bears. We go make new highs, and eventually new high will give us a peak. And maybe we have that today with a bearish engulfing candlestick. I think we do. Just telling you my opinion, I could be completely wrong. This is telling me, hey, we're likely going to top here. Market to digest this week. After the closing bell tomorrow, we've got Meta and Microsoft earnings. And the Fed meeting before that, Fed announcement, press conference. After the bell on Thursday, we have Apple and Amazon. A lot of earnings this week. Tomorrow, before the market opens, we'll have the private payrolls. Expected to come in at 64,000. GDP for the second quarter expected to be 2.3%. Remember, the last quarter, the first quarter, came in negative, but the Fed's estimate was way off. They missed by 2.4%. They weren't even close. Expecting GDP to be nearly negative 3%. The people telling us we're going to have a soft landing. They never see anything. We'll be watching to see if the GDP comes in stronger, or weaker than expected, or does it come in right in line. Later that day, after the market does open, we'll have the rate decision out of the Fed, 2 p.m. Eastern time, and then we'll have Fed Chair Powell's press conference. Rumors going around that Powell's going to resign. And as I keep saying, these are rumors. We have no idea. I don't have any idea. If he does end up resigning, would add volatility to the market. But narrative is, the Fed's going to be lowering, as it always is. The Fed's going to be lowering rates. The Fed is scared to death of Trump's tariffs, that they're going to cause inflation. We've already seen the CPI begin to move off of the lows the last couple months, as I predicted it would. That's right. Fed's not going to be cutting. They're too scared of Trump's tariffs. And when the inflation does start rising back up because the money supply is increasing, they're going to blame Trump's tariffs. That's why I think Powell's going to continue to be a hawk if he doesn't resign. See if the Fed moves the market tomorrow or not. Show all kinds of concerns about the CPI turning back up. And then we're going to get the PCE inflation data the day after the Fed meeting, which again, before the market opens, the Fed likely already knows what that is. The headline year-over-year number is expected to rise to 2.5% from 2.3. The core is supposed to hold steady at 2.7%. We've got the GDP, we've got the Fed, then we've got the earnings, and then we've got the PCE inflation data. A lot for the market to digest. One of these things be the match that lights the fuse that blows up the rally. Could it be one of these issues? Very well could be. On Friday, we got the jobs report expected to come in at 100,000 jobs, below the 147,000 we previously had. The unemployment rate is supposed to tick up to 4.2%. As I said previously, we have earnings. So a lot of stuff going on this week. Additionally, on Friday, we have Trump's tariffs. The deals are now coming to a conclusion. I told you the market is shrugging off this August 1st date. The deals that I've talked about, I told you there were going to be deals. Media scoffed at the very idea that that would happen. They got it wrong, as they always do. We were going into the next Great Depression. The stock market was crashing, and I told you we were bottoming. We were going to go to new highs. I was right. Commerce Secretary saying, hey, trade deals, trade deals for the world will be done by Friday. Wrapping up these deals now. Negotiations for China are going to continue just a little bit longer. We're going to have the new tariff rates, and again, thinking about a 15 or 20% rate. Countries are smaller, have this tariff rate. Other countries that didn't negotiate a deal. We've seen some deals now come down the pike, and again, some really good deals. The EU deal, that was a great deal. The Japan deal, that was a great deal for the United States. Moving these tariffs. I told you this would happen. The media told us it would not happen. The media told us we were going to have tariffs and we were all going to follow Trump off a cliff with his tariffs. The stock market was going to bottom. We were going to go to new highs. Actually, inflation is going to tick back up and Trump's tariffs are going to get the blame. Even though tariffs don't cause inflation, they will get the blame. I promise you. But the herd is ignoring this August 1st date. Oh, Trump's a taco. He's going to pause all this stuff. These deals are wrapping up. They're done. As I correctly predicted, you down at the bottom. The week before, when we were dropping, I told you that we were going to bottom the following week. We were moving towards support, and I told you Trump's tariffs were going to give us a bottom because I knew he was going to pause them or reduce them or both, which is what I predicted, and I was right. Kramer and everybody, the bears, they were calling for a Black Monday crash. I told you a Black Monday crash doesn't happen when everybody's expecting it, and I told you we were going to bottom, and we had market breadth indicators at single digits. We were hitting support. Bottoming signals on the 7th, 8th, and 9th on my indicators. Bitcoin bottomed the same day. Now these very people, the bears telling us the bears had told us the rally was never going to happen, and they'd be calling it a bear market rally all the way up, which I told you, I predicted correctly that would happen. Saying, oh, no, it wasn't the top, now this is. And again, I don't believe we've topped yet. I think we're going to in a couple months. I think we'll get a sell-off, and then we're going to go get one final high. The bears to throw in the towel and to lull the herd into a false sense of security. I called the bottom over here. I told you the tariffs would create a bottom. Over here, I'm telling you the tariffs for August 1st are going to be associated with a top. Here we bottomed 2 days before the tariffs kicked in, and we had this big reversal bar, this historic rally of 9%. Today it's 3 days before the tariffs, and I think, again, you're likely going to see a July peak. Peak in July in 2024. We had a peak in July in 2023, and there's been many, many times in recent history that we've seen July peaks, and the seasonality is suggesting that. And I told you we could go a little higher. The July 3rd high going sideways for couple weeks there and then going higher last week. I told you we can go higher with the seasonality. I think now the divergence is likely coming to a conclusion. Herd believes, oh, Trump's a taco. Trump's going to chicken out. He delayed the tariffs before, so he's going to do it again. And I keep telling you, either countries are going to have a tariff or they're going to have a deal. The delay, which I predicted, was a 3-month delay, which ended up happening because of what we saw Trump do in the past. It was right. This one is set in stone, in my opinion. This tariff date is not going to go away, but the herd is in denial. Trump paused it over here, so he's going to pause it over here, and the tariffs will just not ever have that kick in. And you've had these countries scrambling to get deals, Japan, EU trying to hammer out a deal before that deadline, and they've got it. Done. The deals, as the Commerce Secretary is saying, are now coming to a conclusion, except for putting the finishing touches on the deal with China. The herd in complete denial. We already have tariffs. You know, these deals that Trump's getting, they're with tariffs. And we already have the steel and aluminum tariffs. Other tariffs, as we've talked about, the market's at new all-time highs. Likely going to see a sell-off and then go to a new high, and then the market's going to top. But you're going to get a reality check right here. These people that are saying, oh, the Trump's tariffs are going to be delayed. Trump's going to chicken out. These people do not understand Trump. We're going to have these tariffs, along with all the deals that we got because of the tariffs being put in place. Rising wedge. It's now we're trying to break the trend line. This negative divergence right here that's turning down. We turned up above the signal line, and now we're turning back below it. We have a divergence in the most recent price action. I told you we might reach that upper boundary, but no guarantee. I think that we've just peaked today high. Obviously, here I told you we are going to go below past the 200 period. Going to go up and make new all-time highs. When we do, the herd is going to go, it's a breakout. They're going to get super bullish up here. I told you, again, with the new highs, I'm going to be looking for a top. I told you I have not called a top yet, but I'm looking for one. I think we got a top today. Told you it was possible yesterday with the black candlestick and with our bar from Friday with the black candlestick that we got there. Told you I have not yet called a top. I told you it might be a top. I think we've got the top today. I could be completely wrong on that. I just have the guts to tell you what I think. Very few people will tell you what they think. Most people predict things after they happen. I called the bottom over here because of the things that I saw, and I told you. I warned you over here with the divergences that developed, like on the RSI, that I could be wrong about the new all-time highs immediately happening, and we might get a bigger pullback before all-time highs. Well, we didn't see 20 period taken out. We didn't see my signals turn bearish. My signals have remained bullish through this entire advance. Signals are still bullish. I'm looking at those diversions. I'm looking at the candlestick today. I'm looking at RSI at extremes. I think the RSI is suggesting a top. And again, I wouldn't be surprised to see a sell-off and then to come back later going into September or October and setting up a larger divergence, much like what we had over here. Again, I think we'll get a pullback. I do not think this low is going to be taken out right now. I think we're pulling back towards the 200. Maybe we don't reach it if we get more of a shallow pullback. I think you're going to drop a couple hundred points, 4, 5, maybe 600 points. Then I think you're going to new highs. Close back below that upper Bollinger Band. We gapped higher, but then we started to dip below the band, and then we ended up with a bearish engulfing candlestick. We had a black candlestick yesterday. Again, closed out my long positions last Thursday with this bar right here, and I told you I was looking for a short position. I tried to short that day. I had a stop set very, very tight. I stopped out shorting near the highs, and then we had another rally where we closed the highs, but as we were rallying up, more divergences setting up on the 15-minute chart. Tried another short there Friday. I added to my short position on Monday, and I remain short. We went a little bit higher, but then we got this bearish engulfing. Again, I was looking for rejection around this upper Bollinger Band, as I've talked so much about. So I remain short on both the S&P and the Nasdaq. Closed all my long positions out last week on Thursday. There'd be a little early closing out my positions and be a little late because I think you can end up seeing a big, nasty, ugly bar at some point. This thing starts turning, and it could be turning right here, right now. I think it is. As we're pushing back below that upper Bollinger Band, as I told you to be watching for, we have black candlestick, and now we have a bearish engulfing candlestick. We are completely engulfing the bar from the previous session. The high here and the low here, we've completely engulfed that candlestick. Remember, the S&P was flat yesterday, and that gave us this black candlestick. Remember, the S&P was up 1 point on Monday. Gapped higher. Now we get this reversal. In order for this pattern to play out, we've got to close below today's low in the next 2 sessions in order to confirm a bearish engulfing, and this high has to hold. Okay? I told you we had bullish signals in June, and we got that higher low, another higher low, and we went up to this July 3rd peak, and then we went sideways for a couple of weeks. And we tried to break out right here, and it failed, and then we came back and we got a bottoming tail, and then we actually did break out. But as I said, if we take it from this peak right here and this peak over here, you didn't really have your breakout until Monday, the previous Monday right there, above that high. And then we back tested with this topping tail, and I told you that candlestick would have to be confirmed if it's going to mount to anything. It was negated. We ended up closing above it. And again, you've had a breakout and a back test here. And it went back all the way to this level right here with this breakout. But then we broke above this level really on Monday. So you had two breakouts. You had one the previous Monday here, and then prior to that, out of this range. So again, we've moved higher, but we went nowhere. But now the seasonality is kicking in, and now we're getting this bearish engulfing, I think is likely going to be the top. With the new highs that I was looking for a top, but not have yet have called one. I'm now calling a top here. Could be completely wrong, but I'm just telling you what I think. It's my opinion. That's what it is. For the future, looking for a top. I've been long. I've been bullish. Told you I've been looking for a top ever since we've had new highs. Right about predicting new highs. Now I think we've got a top, but this candlestick is meaningless unless it's confirmed and we get a follow through. So we need to close in the next two sessions below that level. Now, at earnings, we've got the Fed, we've got the GDP, the private payrolls, the jobs report. We got a lot of stuff. The inflation data. Be wrong, but I'm just telling you what I think. I'm seeing warning signs telling you I think we got a top in today. Nasdaq daily chart has a possible one-day reversal bar here. We gapped higher, and then we came down here. We did not close below this low right here. We did not engulf the previous day's candlestick. It is not a bearish engulfing candlestick, but it is a possible one-day reversal bar to be confirmed and get a follow-through. We ended down 48 points, 0.21% on Nasdaq. Looking to play these divergences. I'm doing that. Question is, are they now done? We have multiple point divergences in place here. I think we're completing primary wave 3. I think we're going to pull back at primary wave 4. And then I think we're going to get the final climax high, final rally. This is the final phase of the blow-off top, and I think we're completing a wave 3. This is the divergence here on the Nasdaq. In order for it to play out, the MACD's got to go negative. You got the divergence going on here with parameter here in the 60-minute time frame. I think the divergence is likely done with the S&P. Now, I could be wrong about this. Again, just because I have the guts to tell you what I think doesn't mean I'm going to be right. Don't cherry pick what I'm saying. I'm telling you, hey, I think the top is in. I think, I told you I've been looking for a top. I think today we got the top. Wrong? I could be completely wrong, but I have the guts to tell you what I think. We could see, and listen, I'm not saying this is going to happen. This is what, if I'm wrong, this could happen. We could see the RSI end up turning back up and form just a massive multiple point divergence here and drag this out and still go to the upper boundary of the rising wedges. I could be wrong. If the bearish engulfing on the daily chart gets confirmed, well, then I very well could be right. But because of these divergences forming in the daily and the 60-minute time frame, this is why I closed my long positions last week, speculating on short positions. So far, I'm hanging in there with that. I think this is what's going to happen with the S&P, that we're going to sell off and we're going to, again, get a wave 4 and then get the final rally. If I'm right, we got to drop below the 50 period here. In the 60-minute time frame, we got to take out the 10 period in the daily time frame. Remember, my signals, are you listening carefully? My signals are still bullish. I'm just speculating on some divergences. I think that's likely going to give us a top, and that's why I closed my long positions and why I'm speculating on the short side. I could be completely wrong. I wasn't wrong about the bottom in my prediction to new all-time highs. If we go higher, I may have to abandon my short positions. I think we've got a good shot that the top is forming here. And I think the top has a very good shot that it was being put in today as I was watching these divergences develop. I've talked about them on the 60-minute chart, here on the 15-minute chart, trying to take my positions near the highs on Thursday and then on Monday, and then we sold off and we gapped higher today, went back up to that level. We got a black candlestick here. Is it a gap and trap? Are we now gapping and going in the other direction? We'll see what happens. Again, there's this divergence just giving us a short-term pullback, and we're still going to try to go to those upper boundaries. I told you that it's possible. I talked about that scenario a lot, but it may not happen. There's a lot of stuff. We could see wild swings up and down. I could be wrong about thinking we have a top today. I'm telling you, I think that's what we have. Bullish divergences are forming on the 5-minute chart and the 15-minute chart. Do we rally up and get a lower high below this level over here? Or do we go up and we try to make new highs and still try to reach the upper boundary of the rising wedge? We'll be watching, but I'm telling you, Possible we have a gap and trap now. This gap higher and the sell-off to the lows, that's produced bearish engulfing on the S&P daily. We still try to reach the upper boundary, and we still may. Then you might try to form a divergence here in the most recent price action right here. Again, our RSI did move to new highs. Down here, we didn't form a divergence. We just moved to an extreme, and that marked the lows. That's what we have right here. Is that playing out the same way? We'll see what happens. And I'm telling you what could happen if I'm wrong about peaking with the bearish engulfing. I talked about moving up to this upper boundary right here. We still may do it. A lot of things, the Fed, the earnings. This candlestick is meaningless as bearish engulfing unless it's confirmed and we get a follow through. Listen carefully. I could be completely wrong, but I'm just telling you, hey, this is what I think. What's going to happen if I'm wrong. We're still going to go up to this upper boundary and we can still form a divergence. I'm telling you, I think we've likely peaked. That's what happens if I'm wrong. Regardless, whether we peak here or a little higher, I think you're headed back to the 200 and towards this cloud. I've warned you that the RSI was signaling caution here, being at an extreme. We moved even higher. We were at a reading of 76 yesterday. Today we're at a reading of 77.44 at the high. Here's a sideways move from July 3rd. And again, that if we saw the seasonality play out, then we might try to go to that upper boundary or move at least towards it. And again, I think you're going to peak in July before August 1st in all likelihood, which is Friday. I think either we got a top here or we're going to top likelihood before the month of July comes to a conclusion. So the sell-off and then the rally to new highs. And then again, as I say, we're going to higher levels, likely towards 6,700, 65 to 6,700. In all likelihood, we're hitting 6,400 here. I think we're going to complete the cycle top. If our divergences begin to play out, our stochastics rolling over today. Nasdaq also has that divergence in the most recent price action right here. And we have, again, get rejection at our upper Bollinger Band. Same thing here. I think we're going to end up falling back down towards the 200, towards the cloud. Maybe we don't reach them. Maybe we reach it or just move beyond it. But this is what I think is going to happen. I think we'll get a bigger sell-off than the sell-offs of what we've seen and the corrections we've had so far. That'll be a wave 4. You can see the Nasdaq 100 up close again, turning off that upper Bollinger Band, slightly breaching the trend line. We'll be watching to see if we get a follow-through, confirmation follow-through to a potential reversal bar here. Here's my Elliott wave count for the Nasdaq. Again, I think we're completing primary wave 3. I think we're going to get primary wave 4 and then get primary wave 5. And I think the stock market will probably peak in September, October. In all likelihood, the seasonality will kick in and we'll get an August sell-off. And then I think we'll get the final climax high. I think this whole thing is the blow-off top, completing the blow-off top, the massive rally. What are we up? 46% since I called the day of the bottom for the Nasdaq. 6%, 47%, something like that. P's up 32, now over 32%. I think we're overdue for a pullback. I think we're going to go and make new highs. Going to lull the herd into a false sense of security when we go up and make a top.